My name is Legum. I'm one of the managing partners here at OVM Financial, and I was asked here today to kind of share with you guys what I do and how I meet agents and how I make big presentations to try to generate and get more business here at OVM. The first thing I always do, whether it's a big group or whether it's an individual meeting at a coffee or lunch with an agent, is find out about the agent themselves. I sit down there and just say, hey, what brought you into the business? How long have you been a real estate agent or a realtor? Certain things about their life, about their kids, their family, that sort of thing. So you get to know them and build that rapport. And I think that's the most important thing, is the trust and the rapport, to have them open up to let you share about yourself and what OVM is all about. Once they do that, I kind of talk about who I am and how I got into the business, okay? Just to share with you a little bit about that background, so as if I'm doing it for a realtor. Basically, I tell them, hey, once again, my name is Legum. I've been in the mortgage business since 1998. I started with a company called First Jefferson Mortgage, which was an independent mortgage bank, kind of like we are today. Myself and three of my partners kind of started around the same time. The owner of the company at the time sold that company to a bank, a local bank, and we became a correspondent lender for a local bank, okay? With always the thought of getting back to where our roots were as far as owning our own mortgage company and being able to make our own decisions. And so in 2007 or so, we got approached by a gentleman looking to sell his company up in Richmond. It was called Old Virginia Mortgage. He was getting a little older and ready to retire and ready to sell his business. And so myself and three partners, approached him about purchasing Old Virginia Mortgage, which he did. We kept him on board to help us with our secondary department and so forth. Once he retired, we brought all of our operations down here, and we operated as Old Virginia Mortgage up until 2011. And then we switched our business model or name to OVM Financial because we spread into different states. We are now licensed in North Carolina, South Carolina, Georgia, getting ready to be in Florida, Tennessee, Pennsylvania, Maryland, hopefully by the end of the year. So that's a little brief history about myself and OVM Financial. So I always kind of talk about myself and talk about where I came from and kind of a little bit about OVM Financial. Okay, then I kind of break it down very easily in kind of simple terms. I say, the mortgage industry is not rocket science. Okay, there's three types of mortgage companies that are out there these days. Okay, and for me to back up a little bit, when you're speaking with an agent, you personally, whether you've been in the business a week or you've been in it 20 years, you know more than that agent sitting across from you. I don't care if they've been in the business 20 years. You know more about your business and what you do and what we do, as opposed to what they do, because they're not taught this. They don't really care too much about it, but you want to give them a working knowledge so that they can understand and be helpful, and it gives them a tool in their tool shed when they're talking to their clients about who we are and why they're going to call you. Okay, so back to where I was. There's three types of mortgage companies. Okay, there's the mortgage broker, the mortgage banker, and the correspondent mortgage banker. Okay, and what a mortgage broker does is he takes all your information, all your buyer's information, and he shops it all over the country to different banks throughout the country, hoping that you can get an approval. And based on whatever that approval is, they package it up and send that off to have it underwritten and processed at some unknown location. Okay. Typically, most real estate agents, sellers, builders won't accept a mortgage broker's pre-approval letter because they're not controlling the transaction from start to finish. Okay? And so that's important because you want to be able to control it all the way to the end and make sure it closes on time. Okay? So then you come to the mortgage banker. That's the big guys. That's your Bank of America's, your Navy Feds, your USA's. Nothing wrong with them except for they are just big banks. They do a lot of stuff. They do checking and savings and credit cards. And they do a lot of things. And they also do mortgages. And mortgages is a very specific thing to do. And a lot of times they're just customer service reps who push it to a processing place in Ohio or an underwriting branch in somewhere else. Okay, so they kind of lose control of that transaction from start to finish. Also, you're at the mercy of whatever that bank's guidelines are that day. So their guidelines may be a 640 credit score for VA loans, or their debt-to-income ratios may be no more than 50%. Okay, whereas if you went to SunTrust that day, their rates are a little better than USAA's, or they allow certain things. So each bank has different criteria. Okay. And so when you explain that to them, it comes down to what we are, which is a correspondent mortgage lender, okay? And so we basically have the best of both worlds, okay? We're shopping like a mortgage broker for you on your behalf with 14 or 15 different banks to see where you fit with your interest rate, with your criteria, with the type of loan you need, based on your credit scores, your debt ratios. We try to find you a home. But also, like a banker, we control the transaction from start to finish. We have in-house underwriting, processing, closing, and it's all handled right here locally. Okay, and so that gives us an edge when you provide a pre-approval letter to that borrower and they provide it to a seller, because they know that, hey, they've gone through the process, they've been able to, I have a local person I can call and touch and feel. If there's ever a problem, we can come in there and try to fix it. So that's kind of the difference in the three types of mortgage companies that are out there.